Hi everyone, it's Christian from Serene Education. Going to be doing the four majors analysis update for the forthcoming week, the 20th to the 25th of September 2015. Let's crack on and have a look and see how last week panned out for the four majors, and then we'll take it going forward and see what's available, what could be potentially on the cards for this coming week. So let's start with the euro against US dollar. I'm using the FX8 Ultimate template. And clearly looking at price right now on the weekly, you can clearly see that last week's candle, let me just pan in here so you can see it. There we go. Last week's candle, there we go. Spinning top, which represents indecision in the market. So clearly 5 days of trading last week has clearly seen a lot of indecision on the market. Preferably the indecision came around where people were quite hesitant to take any trades last week because of the Fed and the interest rate announcement that ultimately came out unchanged on Thursday. So what it's led to is an indecision candle. Price is still trading just below a major support and resistance level. In this case, the support and resistance level for 2015 here at 114278. Thereabouts. So clearly the 50-period moving average now coming into play. Of price, we saw last week that price itself actually attempted the 50-period moving average on the weekly time frame, but having said that, price yet again failed to move higher than the current support and resistance level. And ultimately, if we are to see any further bulls from the euro against the US dollar, then ultimately we need to see this level that's clearly been a resistance level over 2015 being breached to start with and closed above. We saw it breach not too long ago, but it failed to actually close higher, and subsequently we saw price closing back to the downside. So yeah, still uncertainty, and with the Fed coming out with no change on the interest rates announcement has led to a lot of volatility in the market across all the US dollar crosses, and euro being one of them. So clearly we've seen an indecision candle. So yet again, clearly a 1, 2, 3, 4, almost a fifth week of consolidation now, or range bound trading from the euro against US dollar at this major support and resistance level. Having said that, Sunday today, and being the 20th of September, the Greeks are voting again today for a new prime minister. So a new political group. So it's going to be interesting to see how that pans out. So there again, we could see some movement on, depending on how things come out on the Greek side tonight in terms of the outcome of their votes. So euro against US dollar, clearly resistance level. Just going to pan down to the daily time frame. Let's have a look over here at the indicator box straight away, and we want to look at the monthly to start with to give trend direction. And clearly the long-term trend is still of one to the downside. But having said that, you can see that the parabolic SAR now, which is a trend related indicator, which in this case, because the monthly chart was to the downside, we would like to see that being above price resisting her. That subsequently has changed now, because if you look at, let's go back to the monthly here just to show you that. So if you look at what's happened over here, there we go, you can see that above price, in this case because it's negative, so you'd expect the parabolic to be above price, which clearly has been. But having said that, now this is the second consecutive month now where we see the parabolic below price, and predominantly because price is not making any new lows, which we would want to see ultimately in a negative trend, or in a positive trend you want to see the parabolic SR below price supporting her. So very similar to what a moving average would do in any case, but you can see clearly as prices failed to make new lows, she's kind of moved sideways, and subsequently what's happened now is the parabolic has jumped from the top end, which is negative, to the bottom end, which is telling us there's a bit of positiveness. The MACD on the actual monthly time frame is still negative. Yes, we've had the crossover down here somewhere because it's gone dark red, but ultimately we haven't broken this. Well, we haven't breached and closed higher than this major support and resistance level I mentioned earlier, and subsequently until that happens, then ultimately we should be looking for it still consolidating in what is still a negative trend. So just moving down through the ranks, you can see parabolic SAR on the weekly also remaining below price. It actually jumped above price not too long ago, a month ago, but subsequently it's back below again as price has made reattempts of the 2015 support and resistance level, as I mentioned to you earlier, and the 50-period moving average. So the one thing is missing over here, if this is to be a total change for euro strength coming into the market and US negativity, is we have the blue arrow, perfect, but we don't have blue candles, we don't have the RMO above the zero, but we do have the MACD crossover. So the MACD has crossed over, and hence the reason why it is bright green, or green above the zero. So that's good, all well and good, but in a trend, we need to see new highs. Well, in this case, positive trend, we need to see highs. That's clearly not been able to be done over the last, since April, in fact, so a number of months. So clearly here, still apprehension, indecisiveness, as I mentioned to you earlier, clearly with this particular pair. So what we want to see now is one or two things. We're either going to see the 50-period moving average resistance level here, so further negativity coming into the Eurozone this week or any week preceding, which is going to push price back down again, which could then see price reattempting price support and resistance levels. Noticeably one there, which is the major one, before we see the March-April low being tested, or vice versa. We clearly see the weekly break higher than this major support and resistance level here, which would then lead to further bullish sentiment coming through on each of the time frames, which would then give us a better understanding. We could be looking to the upside in that case. So here again, we've got to see some movement from the market, and ultimately what we want to then do is look potentially at our pivot levels to give us that. So what we want to then do is apply the order pivot to the charts, just to have a look and see where price is right now in terms of the monthly. So price still above the monthly pivot. That's got to maintain. If that's to be positive, then we need to see price remaining above that level. Ultimately, we then bring on the weekly pivot, just to see where their weekly pivots close, and you can see quite clearly on this particular pair, the weekly and the monthly pivot are smack bang on each other. So here again, you can clearly see that very, very indecisive week last week has caused this very, very tight weekly range. And if I just move down to the daily, you can clearly see now that price is just above that weekly pivot. And the downside is we saw some moving coming into the market on Thursday. But having said that, on Friday, we saw all the Eurozone momentum being eroded, and prices back down to and tested the lows on Thursday. Having said that, it's failed to make a new low, i.e. failed to close lower than Thursday, which is still then put more emphasis of swing high, swing high, swing high, swing high. So as long as it stays above the weekly pivot and the monthly pivot, then we should be looking for further buying sentiment coming into this particular pair for the following week. Having said that, get below the weekly and the monthly pivot this week, on Monday, Tuesday, Wednesday, Thursday, Friday, then look towards weekly S1, back to the institution, and back to the weekly S2, S3, and then monthly S1, which is where these levels done here in July of 2015. That's Euro. Let's have a look at sterling. Here again, let's have a look at the last week's movement, and you can see quite clearly that sterling did close higher than the prior week, which is good because we saw a lot of negativity coming into the market after price had actually ranged for a number of months. There we go. Went sideways for a number of months under the institution moving average. You can see that the candlesticks in this case were still negative. So we should have still been looking for negativity for sterling. You can clearly see that on the monthly and weekly time frames. Having said that, their parabolic SAR yet again on the monthly has crossed below. So more bullish buyers coming into the market. We haven't seen any lows since that April-March low of 2015. Having said that, though, each time she's attempted the institution moving average over the months, she's failed to get above those levels, and subsequently that's now prohibited sterling from moving high against the US dollar. But clearly broken lower recently, but not maintaining that negative sentiment throughout the last 2 weeks. In fact, pulling back aggressively 2 weeks ago, engulfing it. So we should have been looking for further upside last week on the sterling against US dollar. Then we had the interest rates announcement. So going into Thursday and Friday, a lot of apprehension came into the market because of that. And subsequently what we saw was a lot of volatility or speculative trading. And what we have now is a spinning top. But the close is still higher than the prior week. So sterling bulls are still there in favor at the moment now. And what we want to see now on the daily, you can see a lot of positiveness coming through on the daily time frame. So when we get down to the daily time frame, there we go. The institution's still below price. Blue arrow candlesticks, moving average all below price, which is supporting it, was at a positive sign. RMO is above the zero. MACD above the zero, so it's positive. So here, ultimately, look for further bull moves this week going into the end of September to see if we can see further momentum to drive or retest the current highs that we've come through from the weekly time frame, which would be ultimately our institution moving average on that time frame. So here on the weekly, you can clearly see that roughly around that 158,430 and change would ultimately be our target for the remainder of September if sterling sentiment still moves up. If not, then we could see price falling back again and then tempting the lows that we've currently come from. So I just want to apply the pivots to this just to give us a better indication of that. So let's get the pivot calculator on here. I don't want to see dailies. I want to see the monthly to start with. So clearly there you can see on the weekly, price is or has just cleared above that level. We saw the monthly pivot S1 being tested level, and if I just drop down to the daily time frame, you'll see that a lot clearer. So Thursday break high. We saw sterling momentum coming into the early parts of Friday, but subsequently by the end of the close we saw a pullback on the market, but it's still above the monthly pivot. Let's have a look and see where the weekly pivot falls for the end of last week's close. So there we go. You can see that the weekly pivot is below price. So perfect. So as long as she stays above that level, then we ultimately would want to see further bullish sentiment. As I clearly mentioned to you, stays above the monthly pivot, then look for further highs. Stays above the weekly, even better. So it's above the institution or the moving average below price, as I mentioned to you before. So everything over here, very similar to the euro counterpart, is we're seeing positiveness coming through for sterling. It is a messy range, not a genuine trend, as you can clearly see here. When we get down to the daily, you can see the price has been all over the place. Whether you choose to trade this range is entirely up to you and your choice. But just remember, because you're trading within a very messy range, volatility is going to be a massive issue here. Therefore, the risk goes up tenfold. So here again, entirely your choice. Look at the fundamental side of it to see if anything will drive sterling high again, or erode the US dollar in this case to give momentum to sterling. But ultimately, we clearly have viable target levels for the current week that's ahead of us. So stays ideally get above the weekly R1, then target the R2, which is the monthly R1, and then the R3, which is the current resistance level high that we saw back in June of 2015. So there are genuine targets to the upside. We're looking in excess of 120 pips to the first level, but then to the next one, another 200 pips. So there's clearly profit to be major if and when we do get everything marrying up. So there again, just do your due diligence. Moving on to the US dollar Swiss franc on the weekly. Yeah, look at that. A lot of indecision came through last week because of the interest rates announcement. A lot of people were expecting some sort of move by the Fed. There has been a lot of growth within the US market. It's clearly there to be seen. Having said that, Yelen's still not very happy with how things are panning out globally. Predominantly what's happening in China is a major concern. Also, inflation within the US is still not great. It's kind of hesitated, which is not good. So ultimately, we'd like to see that. And then the continued low price of oil is going to have an issue, a major command on inflation, and that's not going to go away as long as oil remains low. So there are a number of clear areas where the Fed thinks things could actually get better, and until such time that occurs, we're likely to still see unchanged interest rates or bank rates at 0.25% for the US market until further notice. So people were expecting an interest rate hike for the US market before the close of 2015. That remains unlikely as things go on. So we could see something similar to sterling, maybe leaving them to the early parts of 2016. Clearly apprehension over here on the chart, not making new highs. And ultimately, if you just draw a very rudimentary trend line on here, you can clearly see that since January of the start of 2015, we've failed to make any new highs subsequently over each month. Still holding its ground above the institution moving average, however, the candlesticks are still positive. The overall matrix of here is predominantly blue, but there again, as we saw with the euro against US dollar and sterling against US dollar, the parabolic SAR had now moved above. And clearly, that's clearly the case over here as well. The R squared on the monthly now has turned red, which is not a really good sign, because ideally we want to see the R squared remaining blue across the board depending on which way the price is moving. In this case, we're seeing positiveness for the US dollar against Swiss franc. Therefore, the R squared needs to be positive to tell us that the sentiment that we're seeing, the positive sentiment we're seeing on the chart, is genuine. And the R squared does exactly that. When you're seeing price moving and the R squared remains red, it tells you that there's no genuine real sentiment behind that move. Therefore, it's more speculative, therefore not really driving the market and more riskier to take the position. So now in the monthly, the longer we failed to see new highs, price has gone sideways. That's now changed the R squared to its red. Having said that, the parabolic SAR now has jumped from below price supporting her to above price now resisting her. We're not seeing new highs, so that's a concern too with the US dollar. We are clearly seeing a US dollar slowdown, which is not really great. And having said that, people would like to have seen the Fed increasing interest rates ideally to really move the US dollar even further now, because quantitative easing is no longer in play. And we've seen a lot of growth within the US market over the last 6 years as $7 trillion was pumped into their quantitative easing program, or pumped into the market using the quantitative easing program. Now there's no quantitative easing, and if you look at the S&P 500 and the Dow or the Nasdaq, they've not really continued the momentum that we've seen throughout the years, the 6 years. It's actually gone sideways, and we've seen major pullbacks recently on those markets, the indices. So, which is not really good, because now I think people are thinking, well, all the movement that we've seen through the US market is predominantly just been because of quantitative easing. If we don't see those markets continue to rise without that liquidity injection, that tells you that clearly that the markets within the US market was made up on fictitious volume. They're almost on morphine. They've been on morphine for so long. Now they've needed. Now they've taken themselves off the quantitative easing or the morphine, and people are getting ratty, skittish. So could there be a return to quantitative easing? So hence the reason why people were wanting interest rates to rise, just to bring a bit more positive liquidity in the market again in terms of long-term bias. But yeah, there remains to be seen. So a lot of unanswered questions in the US market, which is also going to have a knock-on effect globally. Clearly here you can see the US dollar Swiss franc not really doing anything fantastically since the start of the year. I, for one, have not traded the US dollar Swiss franc purely because of that. The apprehension with Swiss franc in terms of what it can do, intervention and stuff like that, and we clearly saw that in January, that gives me a no-no. It gives me an uneasy feeling. So there's a lot more other pairs out there, far profitable pairs, going places than to trade this particular pair. So I've kind of just stayed away from it. The US dollar Japanese yen. Here again, you can see the monthly trend is still to the upside, perfect because of US strength against a very weak yen cross. Having said that, though, the weekly, we started to see a lot of negativity coming through. But that's predominantly because the weekly has not really, we haven't seen any new highs. In fact, if you look at what's happened at the end of 2014, in fact, which was here, you can see that we actually spent the first 5 months of 2015 going sideways. Then we had a breakout, but prices failed to really continue the momentum. And then with the uncertainty with China, etc., and the slowdown and all these things started to stack up, and interest rates being dragged, the Fed, that's put a lot of uncertainty out there, which has led to this a lot of indecision candles going forward. And then we saw prices falling, and for the first time in as many months, prices actually fallen below the 20-period moving average, which in this case has actually supported price quite beautifully over the years. That's now come unstuck as the 20-period moving average price closed below, and then subsequently, because of that, price would have headed back towards the next moving average support and resistance level, which in this case would be the 50-period moving average, and which would have been the support of here of the start of 2015. And now she's just hovering around there. She's actually ranging. The last 3 weeks, in fact, month, price is actually ranged. If I drop down to the daily, you can clearly see that. It's still under the institution now, which is a clear indication that there's a lot more negative sentiment creeping into the market now, because if you look at the daily now, for a long period of time, we saw a lot of blue candles, which told us that there was more bullish sentiment with the US dollar against the yen. We were trading above the institution, which is another clear sign of positiveness in the market. Now, as this year has panned out, we've seen prices failing to make new highs, and subsequently more negativity coming in to play, more bears coming in, which has pushed price below the institution. Now we're below that level now. She's failed to really do anything, but she doesn't want to give up. She wants to give up, and she's moving sideways now, but it's still below the institution. So ultimately what we're seeing now is a lot more bears coming into the market, price is not moving, making any highs, that would clearly be the case now, because people don't want to be holding US dollar long against the yen if we're not seeing any more of that volume coming through. So a lot of people closing more and more contracts that they've been long for over the monthly period, which has seen further negativity on the chart unfold. So here, clearly within a range. If we are to see further US negativity, then we need to see the current support and resistance level low being broken to then see a continuation of negativity. So if I just bring in the monthly pivots, let's just have a look and see where those levels are at the moment now. So let's have a look at the monthly. The monthly pivot's above price, which is a negative sign. So there again, got to see price maintaining below the monthly pivot, because then what we would likely see is price moving towards a monthly S1 level below before it sees S2 and S3. So clear targets below price. Where has the weekly pivot actually closed, or actually presented itself for the new week ahead of us? Let's have a look. Let's apply that in the chart. So now you can see that price on the daily, that we had an indecisive day on Friday, but it's still closed below the weekly pivot. So now you can clearly see, unlike with the euro against US dollar where price was above the weekly and the monthly, here it's the other way around. And what we clearly see now is price now below the weekly and the monthly pivot, which is a negative sign in itself. All the moving averages above price on this particular time frame. The RMO is below the zero. MACD is the only one at the moment now which is green, but it would be green because price is not making new lows. Remember, MACD is used for trends, therefore we need to see price making new trends. That's clearly not being the case. Price has been moving sideways, which is range bound trading. So therefore the MACD would not work in that case. So you can clearly see how we want to see, if we are to see any further negativity coming through for US dollar against the yen, then we need to see the MACD moving back towards bright red again, breaking the support and resistance level low here, ideally the weekly S1 level, which would then bring in that monthly S1 as our major target going into the end of September, going into October, November of this year as potential targets. So here again, just be patient, wait for a clear movement, look to see what the fundamentals present themselves this week going forward, and then look to see if there's anything that could actually move or pose a threat for US dollar negativity to continue, and likewise yen's strength to come through to really move this particular market. Just a heads up that the Japanese market is closed both Monday, Tuesday and Wednesday for bank holiday the start of this week. So liquidity on the Asian session will be quite low because of that, because of the holidays. So here again, just be aware of that. Always make sure that you are aware of the fundamentals that come out. So do your due diligence, do your prep work on your charts. Got to get that all right, and then what you do is you look at the fundamentals out there to then see if you're trading a particular pair, what the forecast is for, and then ultimately look to see if that really plays out with what you're seeing on price action itself. Just be patient enough to wait for price for that particular fundamental news to come out. Does it back the long-term trend sentiment? If it does, hooray, take it. If it doesn't, stand aside, wait, be patient. Back that up with sound money management rules, guys, and you're on for a winner. You'll make less mistakes, keep it very mechanical in its process. The FX8, our templates are very mechanical in their setup, their makeup, and it's vital that you do trade something that's very mechanical in its approach. That emotional side out of trading, and you'll find that you'll make less losers and you'll be far more profitable going forward. I hope you have a fantastic week ahead. Please keep it as simple as possible. And most importantly, you guys trade serenely.